Dr. Arvind Subramanian, the Chief Economic Advisor in the Ministry of Finance, joining us on the phone line. Thank you very much, Dr. Subramanian, for being with us. We just had the Finance Minister speak to us a while back, and so we can't thank you enough for joining us. Also, you were one of the early beginners of the GST with your report. What do you make of the final rates that have been announced, the final fitment rates today? 4 slabs in goods, 4 in services. Warranted?
Yeah, I think, first of all, I think
Dr.
this is a
Subramanian.
moment. Yeah, this is first of all a moment to, just recognize that, we're one step closer to realizing the GST vision. So this is the moment to think of, to focus on what has happened and, the fact that a major journey we're reaching the goal. So it's a moment for celebration on the one hand. Now, in terms of the rate structure, I think that clearly it's not exactly as we had thought it would shape up when we first embarked upon this, or even what we had in the report that I wrote. But I think that the two things one has to note is that it's a significant improvement on the status quo. The status quo had many more rates. It's also going to be an improvement on the status quo in terms of, I think, the average level of rates. I think the rates are going to be lower than they were today. So both in terms of complexity and in terms of the level, I think it's going to be an improvement on the status quo, significant improvement. I mean, whether it's, the perfect GST, that, many wanted. I mean, I think it's a work in progress on that score.
But sir, I'm curious to understand, and I will get to products in just a bit, because I think products are all set to get cheaper, at least for most of those. But I'm curious to understand what warranted 4 slabs in services. I mean, I understand 5%, 12%, 18 and 28. Why is telecom more expensive than it was? I mean, 14% was the previous rate. It goes up to 18. Financial services is 18. IT services, the service tax will be 18%. I'm just trying to understand, what was the rationale in putting all of this to the 18% rate? I know 18% is the standard rate as far as services are concerned now, 12 to 18%. But would you help us explain the rationale for putting telecom, financial services, and even IT services there?
See, remember the one guiding principle for almost all the rates was that the incidence, the real incidence, i.e., after taking into account what the embedded taxes and the input tax credits would flow, you take into account everything. The GST rate is not going to be higher. Almost for most, overwhelming majority of the commodities, it's going to be either the same or slightly lower. Now, in the case of so that principle applies to telecom and other services as well, because the fact that now it's a little bit higher in terms of the headline rate doesn't mean the effective rate is going to go up, because now you're going to get input tax credits on it. So earlier it was 14 plus the 2 cesses. Now it's going to be 18 with input tax credit flowing. So it's pretty much going to be similar in terms of the real incidence. So there's no increase of any significance for any significant item in real incidence terms. Don't look at the headline rate.
So, I mean, just for the benefit of our viewers here, because there is a lot of misinformation out there as well, this GST as things stand is not going to be inflationary at all, because the prices of goods prima facie have gone down, and services via the input credit route will also be largely where they were, right?
Yeah, I think that the one thing I can say unambiguously is that there should be no inflation concern at all, because the average level of incidence of the GST rate is going to be, slightly lower than the current rates of state VAT and the excises put together. So I think the inflation concern should be kind of banished forever.
A specific question, sir, on exemptions, and the whole idea of GST is to wane away and wean away those exemptions gradually. I'm presuming there will be a lot of grandfathering, but could there be an impact on taxation, tax revenues at all? Is that a cause of concern? Is that a lurking suspicion on the backs of at least your revenue colleagues?
Well, let's see. You see, I think I've said the average incidence is going to be slightly lower, but I think that once we see, the response to the lower rates and to the fact of the input tax credit mechanism resulting in this invoice mismatching. Remember, in the report that I wrote, I said we should get at least something like a 5% increase in the effective tax base due to all these things that the GST is going to bring, especially invoice mismatching and so on. So if we get those levels of compliance improvements, I think that we should get both reduced incidence and our revenue should not be adversely impacted in any serious way.
A quick question, sir, on luxury tax at 28%. I think Pawan Goenka of Mahindra & Mahindra was with us, and of course this is not a sector that he operates in, but that's the question that I put forward. Will the luxury tax of 28% actually dampen demand, because this is again a revenue grosser of sorts, or is there enough elasticity in pricing that is available? I mean, what has been the thought process in putting luxury at 28%?
No, you see, even on those, I think, this is a point that has to be emphasized, that when you look at the 28% rate, in no case is that 28% higher than what it was previously. Remember, previously, whatever has gone into the 28 was previously 14.5% by the states, 12.5% by the center. So it varied between 28 and 31. So in no case does a 28% represent an increase in the rate relative to today. So there should be no concern on that score at all. Yeah.
Sir, also very quickly, want to ask you, I think the Revenue Secretary, Dr. Subramanian, before I let you go, a quick question on anti-profiteering measures. I know that's an area that concerns the government. How soon do we see that coming into effect? And the government will perhaps also be scanning the books and balance sheet of companies to see if benefits are being passed on due to the low tax incidence. Is this any amount of interference, according to you, from the state into corporate entities?
Yeah, see, the thing is that I think essentially we need to, all consumers, people in media need to sensitize everyone to the fact that there is going to be slightly lower incidence. So therefore, we should expect this to flow through into prices, and everyone should be on the alert. Now, the anti-profiteering is a kind of signal just to say that a government is going to be, making sure that, and it's part of a collective effort to make sure that these, tax decreases are passed through. So I think it should be seen more as a kind of symbolic, optical effort as well.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.